Over 800,000 new businesses are started each year in the UK. However, just over 40% actually survive more than 5 years, and a lot less actually go on to make enough profits to invest in alternative asset classes. But for the successful business owner who do create such profits, what should they be investing in? As a fellow business owner, I can see this being a very controversial video. I'm going to reveal the investments I would recommend staying away from and why, the investments I'd focus on next to give you long-term wealth, and a simple solution I deploy for my business owner clients. But let's first give context to the recommendation I'm about to give. For the right type of business owner, this works really well for. So it's ready for the business owner that is generating 80 to 100,000 pounds profit or more per year after taxes and salary and standard dividend payouts. Lower than this, and I really think you should focus on being the best version of yourself and really growing your business and their profits further. That maybe looks like improving marketing, operations, sales, etc., etc. However, from experience with clients making £100,000 net profit in their business, that's where I'm seeing strong commonality. There's an abundance of assets you can consider looking at, like savings, shares, bonds, CDs, and even crypto. But the challenge is that they either don't give sufficient returns to help build your wealth, or they come with a roller coaster of swings and returns, don't give confidence and certainty. For example, let's take CDs and bonds. The only person who really wins is the issuer, as the interest rate is commonly far lower than inflation. So the real value of your money is actually decreasing. From my experience, business owners are driving their business forward daily, dealing with uncertainty each day, each week, and each year. So then investing in an asset class that adds more uncertainty, more risk, more unpredictability can often be a step too far. Investing in crypto and not knowing which coin will actually survive, let alone perform well, or hacking into exchange platforms and having your coin stolen creates far too much risk in my opinion. Look, I'll hold my hands up and share that I personally have had the unfortunate experience of being a victim of crypto theft, losing thousands and thousands of pounds. So what's the solution? The Times Rich List leaves some really key clues. McDonald's, one of the biggest fast food chains, leaves even more clues. Let's look at it. We think they're burger flipping machines, but their primary business model actually focuses on this alternative asset. So what am I referring to? It's property. It provides a tangible asset, it generates cash flow, and provides capital appreciation potentially too. So yes, it's not sexy, it's not fun like crypto, but the trade-off from the day-to-day business risks, this offers a great solution. So alongside investing in long-term stocks and index funds, which generate 7 to 8% return each year, property helps create a robust long-term investment plan. Moreover, property helps amplify these returns. And when you invest in strategic locations, returns can be as high as 10 to 12% ROI. So I said I would share the simple alternative that I deploy for myself and our clients. You see, I focus on undervalued, up and coming areas, which with the use of leverage gives returns in excess of 10 to 12%. Plus, because we've got a strong network built over the last 10 years, we've been able to get prices 10 to 15% off the true value, meaning that instant equity and an even higher return. Take for example this property that we just secured for one of our clients. Okay, so I'm just going to show you this example. So this is a property in the Northeast. As you can see, nice, simple, like really simple property investment. And then here's the inside, like ready to go. Not much work to be done to it, apart from a few repairs, maybe a lick of paint here and there. As I mentioned, we have some comparables where properties similar to this are going for 110, that's sold for 120, 130. I'm not saying this is the case every single time, but this just kind of gives you a good example of a nice simple property. Let's dive into the numbers. So we bought this, or we secured this for a client for £90,000. And our analyzer shows if you bought it for cash or bought it for a mortgage purchase. They bought it for 90,000. We expect around £500 for the refurbishment, give or take. The end value, as I shared, is around the £110,000 mark. We put in some costs for management, and we expect the property to rent for £750 per month. At the time of shooting this video, it's actually been secured at £750, so even better. So when we look at the money in, we're looking at total cash of £25,000 or just shy of £25,000. And this kind of gives you a breakdown. So renting for 750, we put some money for the building insurance, for our property management, the mortgage costs, again reiterating just less than £25,000 being invested. In return, there's a gross yield of just less than 10%. That's really good yield. And the monthly net income cash flow was £350, which on an annual basis is £4,000, giving the investor a return on their capital of 16.18%. So that's 16%. And then if we look at adding the equity, so we get the true value of the year one return, we're expecting this property to be worth around £110,000. So there's around just less than £20,000 equity. Our cash flow is just over 4,000. So when we look at it, it's literally near enough a 94% return on the money that they've invested. We're expecting year one of a return of £23,500 when you add the equity and rent, and they've invested just shy of £25,000. So really good, solid investment. You know, it's not gonna give you headaches, it's got no uncertainty, it's a good, strong area, minimal amount of work needed to be done, a really solid investment. So you can see from the example, overall it demonstrates the power of property. But knowing what to invest in is just the start. There are several potholes along the way, and one is finding which area to invest in and which areas to avoid. So watch this video to find the several areas I absolutely tell my business owner clients to avoid in order to build a passive, no headache portfolio.